Jeet. It's chai time with Realtor Jeet and Will Grausso from Cardinal Mortgage. And I'm so happy to have you back here on this podcast, on this live. And we're back as promised to talk about 203k Rehab loans. So, Will, I would love for you to introduce to us what is a 203k Rehab loan or rehabilitation loan.
All right. No, I appreciate the opportunity to, be here today to speak about it. It's a special kind of loan. It's not available at, every lender. And it is for that house on the block that does need some work. So it is a FHA product, which makes it available to a lot of borrowers. As we know, if you don't have 20% down, you're in a situation where, you have to use either an FHA or a different conventional loan. The 203k loan is for those houses that need some work. They need some construction. They have some sort of rehab done, that would make it fit, and it provides you that opportunity to finance the rehab. So we'll go into the different scenarios and kind of what we can do for that. But that's where a 203k loan does fit into the lending products.
So the 203 loan, it would be. Now, the question I have is, what I heard is a 203 rehab loan is a loan that is given to the buyer or the investor who is looking at a house that needs renovation. Is there like a minimum on that renovation?
Yes, there is. The minimum cost is $5,000, and there's a standard 203k loan where it has to be that amount in order for it to fit in that box. And then there's also a limited 203k loan where in that scenario, it's under 35,000. So you have the standard where it can be a bigger project and it fits into that product. And then you have the limited, which, it has to be under 35,000, but it is definitely available to, fit the project within that budget.
Okay, awesome. So can you explain just in a little bit of more detail of what the difference between that standard and the limited is? Is it just the cost?
It's the scope of the project. So it's really just the cost, and, where it fits and how much work needs to be done at the property. So those are really the two differences. And then it gets a little bit more in detail with, on the standard, you need a consultant. So you need someone who's a little bit more involved in the project to oversee it. And then the limited, because it's less of a project and less of a dollar amount of construction, a consultant isn't required.
Okay. So with the standard, we would, anybody looking into the standard would need a consultant?
Correct. It's someone they hire as part of, the process. So they apply for the loan, they have a consultant involved, and then it just kind of goes from there.
Okay. Now, who chooses the consultant? Does the mortgage lender choose the consultant or the buyer?
I believe the buyer chooses a consultant. Okay. They do have to be HUD approved, so it is a requirement, and it's a certified professional, but I believe that it's up to the buyer's discretion.
Okay, awesome. Now, the next question I have, Will, is what is the loan limit for the standard and the limited?
Okay, and I want to just clarify something. You did say investor earlier, but there's something important about the 203k is it's really only for a primary residence.
Oh, okay.
So awesome. It's specific for homeowners that are looking for a primary residence that needs some rehab.
Oh.
So it's not available to, do it with a second home or an investment. So it's specific for people looking for that. But the loan limit aligns with the FHA limits. So in Suffolk County, New York, it's just above $822,000. And it's also available for 1 to 4 unit buildings. So in that scenario that we just described it as a primary residence, if you are moving into a 2-unit building as a primary residence and then need some rehab, you still can use the 203k loan, but the loan limit also increases. So it's about $822,000 and change for a single family. For a 4-family, it pushes to just above $1.6 million. So, it's a spectrum. It's the FHA loan limit. You can always search by your county if you have any interest, and we can always look it up quick for any buyer. But that's where that loan limit comes in. It aligns with the FHA normal conventional lending. And like I said, it is available. The 203k is available for 1 to 4 units, but it does have to be the primary residence.
Okay, so I'm getting this right. $822,000 for a single family home is the loan limit. Then,
Correct.
all right, awesome. And then it was 1.5 million, I want to say you
One
said?
one point about 1.6 million and a little bit over, in that range.
Okay, and that's for 2 units.
That's a 4 unit, so it's a spectrum. So just
Okay.
yeah, yeah, it's the same figures as any FHA loan limit. So you can Google if you want an FHA loan limit Suffolk County, and you get the breakdown. So it breaks it out, and like I said, it's 1 to 4 units is available.
Okay, awesome. Now, of course, if anybody had more questions about the loan limits and what's best for them, they would reach out to you or whatever lender that they would be looking for. And now you
Absolutely.
did mention not a lot of lenders or not every lender provides this service. So this is something that you have that you provide now, a service that you provide.
Yes, yeah. Cardinal has a complete offering for it. Like I said, Cardinal is also nationwide, which is beneficial. So they have the ability to do it throughout, and it is a specific product that is available within their current lending spectrum.
That's awesome. That is some good news to hear.
Yeah,
So for anybody that's listening out there and are looking for to purchase a primary residence, and if this looks like an option that you can go with, you can always reach out to Will as well. Now, Will, can I, as a buyer, purchase or buy a REO or bank-owned property with a 203k loan?
and this is a good question because we mentioned you can't do it as an investor. So
Mhm.
if you're doing it as a second home as an investor, you're not allowed to do it. But buying a bank-owned property. So what that means is that's a property that went all the way through the foreclosure process, went to the steps, at the town hall, wherever it was auctioned. No one bid or no one outbid the bank, and the bank takes it back. It then lists it as a real estate owned, which is REO or bank owned property. And it's usually beat up. It's one of those homes that's been vacant for a while, or someone, through the foreclosure process didn't take care of it. So it's kind of a perfect fit for a rehab loan. So if you do see one of those properties on the market and you want it as your primary residence, the 203k loan can fit perfectly into that scenario. So even if it's bank owned, you can go in, you can use this product, you set up the rehab, as long as the bank selling it is okay with the financing as you have it lined up. And that's also just one slight negative about the product is it takes a little bit longer than a conventional or general FHA loan because you have some interaction with the construction. So it just means it could take 60 to 90 days where a general, transaction should take 30 to 60 days. So it's not a huge difference, but your seller has to be a little bit aware of that and they have to kind of consider that when they're accepting the offer. So it is available as long as it's your primary residence. It's available to use to purchase a bank-owned property, or an REO. They're the same thing.
So I love that you clarified that because I learned something new today. That's not for
Yeah,
investors. This is for primary homeowners, people who are looking to purchase a home and to live into this home. Now, is there like what are the benefits, Will, into looking at why would somebody look into a 203k rehab loan?
sure. And it's just doing real estate transactions. Like I said, you've known me for a while, but I've been around real estate transactions for 15 years. And part of that is when you go to purchase a home, in particular your first home, you run out of cash pretty quick. So if you look at a scenario where you're buying a home for 300,000 and it's not in the best shape,
Mhm.
you then have to lay out between down payment on an FHA and closing costs. You're laying out between 23 and 30,000, depending on the property taxes for the house. and then you have to get into the house and do the work that's needed.
Yeah.
So if you do a general FHA loan, you go in, and you get it going and you do it project by project. So after you lay out all of your money for the closing and everything else, you can do a bathroom 2 years down the road or a year and a half down the road, save up the money, make it work, get going. With a 203k, if you want to do these things right away, you can line up the financing as part of it. And that's where the situation becomes important is you look at it like, all right, I'm going to buy this for 300 because the bank owned or because this is the situation because it's dilapidated and it needs work. And I want to do 30,000 worth of work to it. So you can do a perfect limited where you now have a budget to do 2 bathrooms and the kitchen if you can fit it within 30,000. It's not easy to do that on Long Island, but so now you have a scenario where your loan amount instead of 300,000 is now 330,000 at market rate right now. It's not a huge swing with your payment. So now your payment's $75 more, but you have that 30,000 built into your mortgage, and now you have a new kitchen and 2 new bathrooms. So it's just the ability to finance the construction, what's necessary at the property. So that's also one of the limits. You can't go using that money to buy a hot tub. It's just not allowed. But if your house needs that type of work where one of the bathrooms isn't functional and the kitchen isn't working and you need to redo certain things that make it habitable or make it fit, that's where the loan is perfect and you have the ability to finance as part of the mortgage. So as long as you have the patience to include that as part of the process, and like I said, make the mortgage process a little bit more detailed, it can be a major benefit because now you're paying $75 a month extra, give or take, and you don't have to come up with another 30,000 cash to complete the project over the next 2 to 5 years. Because most people, it takes a while to come up with that much money and to get the work done. So it's not, if the value is there to do the construction as part of it, it might make sense to do the 203k with that a purchase of a home like that.
Okay, so that's a lot of detail going in through from starting from the application to the loan into what you need for that money. So I'm assuming, and I know you know this, Will. What do we need to show that this is what the house needs? Like, does the buyer need to show that to the lender that this is what the house needs in order to bring it up to par to live in the house?
Most of these scenarios would be, this is just my guess, is the seller selling it as is. So the
Yeah.
seller, you could do a home inspection. Most likely the seller is not budging, and whether that's a bank or someone with it coming out of an estate, whatever it may be, they're most likely not going to complete a punch list for you on a home like this.
Yes.
But when you go through the process, you do get a contractor who provides a detailed bid.
Okay.
And that helps establish the budget for the construction draw. So that's part of the lending process is you get into the house, you do the construction bid, and that details how the lender sets up the draws to get the work completed. So like I said, the consultant helps a little bit,
Okay.
on the standard, but the contractor also provides a role there with getting that documented and figuring out where the money is going.
Okay, that's awesome. And then the loan process goes through all of the consultants and the contractors. And can you just walk us through a little bit of that process, please?
Yeah, sure. So first step is you apply for the loan. So we look at the numbers. One of the benefits for, like I said, a first-time home buyer or someone using these guidelines is it's an FHA guideline product. So that doesn't mean that you have to show excess income on top of a normal loan product. It's based on your normal income. The ratios still apply the same. The credit scores are still very similar to FHA, which is favorable to borrowers. And same thing with down payment. So it's all within that same range. It's not like you have to put 20% down to get this type of loan. You're still within the 3.5 to 5% down, and it just makes it work. So with that, you apply for the loan, you set up either the construction bid or the consultant detailed report. Um, then you start the work, you get a draw, you do a final inspection, they show the work is completed, then they finalize that, they do the final draw after the work is completed, and then the deal is closed out. So it's some interaction with the contractor, on that construction draw, and like I said, you get the deal done based on financing everything to get the house the way you want it. So, but it is, like I said, I guess it is more detailed, and it does take a little longer than a conventional loan. But it does, like I said, there's benefits to that.
That is amazing. Thank you so much, Will, for explaining this because I know I have a lot of questions on it. And I've learned of 203 loans back when I was doing a CE course
Okay.
in 2018. And that was the first time I heard of it. And it was something new to me. And I I saw a lot of lenders who were working on houses that were destroyed by Hurricane Sandy. So that was way back then.
Yeah.
And so it is a way I believe it's a great way. Like I believe Kat just mentioned, what a great way to renovate to get renovations done that are needed right away, and also to help pick up houses in communities that are needed to be lifted, like houses that are abandoned or, like you said, you mentioned trust homes
Yeah.
that may have not.
Yeah,
No.
man, nothing kept up.
Hmm.
Like it's just, as like I said, I've been around distressed properties long enough. Is either the people leave once they fall behind, and then it's vacant for 4 years, 5 years, 6 years, and it just falls apart.
Yeah.
Or you have a scenario where someone passes away and the family can barely maintain it because either they're not in the state or it's just a lot to maintain another property, on top of your own most of the time. So it happens. It's one of those things that it happens. And these loans, when they do the sale, these loans fit perfectly into getting a person looking for a primary residence that needs work into
Yeah.
that home.
I think
So
that's such an amazing product,
yeah,
and it's an amazing product for people to know of if they don't know of it
yeah.
already. And
You definitely need a little bit of patience on the seller side, but it's not, it's not out of control with how long it takes. So
okay, so that's
that was
awesome.
just, yeah,
What
yeah,
are some type of sellers that do sell? Like these are not normal sellers that are
yeah.
selling houses. So what are the type of sellers that sell through rehab loans or accept rehab loans?
Honestly, it really can be any bank. It depends on where they stand with it. It could be any investor. If the number is higher, like they might want the 203k offer instead of the cash offer on the property. So it's just a matter of them feeling out their market and feeling out their, what deal they want to take. And some just won't take it because they don't want to wait. They don't want to wait 65 days or 75 days or whatever it will take. So that's the way they can choose to do it. They're in a situation where they don't have to take the highest offer. It's up to them. They want to take a cash offer that's less money than the 203k offer. They have every right to do that, just because of the convenience and the timeline. But I've closed transactions with REO purchases for 203ks. And I've done enough on the other end to know that it just depends on the bank and it depends on the investor with how they want to take a deal, if they want to take a deal, and just to see if it goes through. So it really depends. So it can't fit. It actually means that it just has to be the right scenario for it to work. So
Awesome. Thank you so much, Will. So, is there any advice or suggestion you want to give to anybody that's watching, or how they can reach out to you so that they can get more help or at least more insight into if this is an option, either if they're in the selling position or in the buying position?
yes, yeah, no, pretty much they can always reach out to me at Cardinal Financial. I can shoot up information. Or my name is Will Grausso. I'm a loan officer with the Islandia branch. And I think what's most important is to kind of understand what you want to do with the house, and if it makes sense to do the rehab. So that's, investors call it back end value. On a 203k, they say as repaired value. It just means the same thing. So I think that's what's most important is you look at a house, you feel you're getting a deal because it's beat up.
Mm-hmm.
You have to look at that. You have to look at what 30,000 in work or 50,000 in construction will do for you at that house, and where you land with the value. And that's how the number, and it's just the numbers have to make sense. So as your primary residence, it's just something to consider. All right, I can get it for 250. If I put 40,000, if I do the draw for 40,000, I get this, and this completed. I feel that it's worth 350 all day long, and with that, it makes the product fit. It makes the effort by you to go through the 203k process, worth it. And it should help you add value to your home. So it's a scenario where instead of stretching to do an FHA loan, on something that's completed, and barely having any equity in the beginning, you might have a scenario where you get a deal on the purchase, it requires the work, and maybe you built yourself 40,000 in equity within the first year of owning the house. So
Mm-hmm.
it can provide that benefit, but you have to understand what you're getting yourself into, both as far as construction and as far as the lending process. And like I said, I would help you look at the property. You also have to have a good understanding. You got to speak to your realtor about having a good understanding of that back end value and make sure it makes sense. That's where someone like Jeet is very valuable. Is she knows her neighborhood, she knows her borrowers. All right, I'm doing this in this town. If I can get it for this, what is it worth once it's in good condition and these things are completed? So those are huge figures, and it's why the extra effort is worth it.
So I love that. I love that, Will. So we're looking at the property. We're looking at the value of the property once it's fixed at I want to say once it's livable.
Yeah, once it's yeah,
Once it's livable, you're looking at is this investment worth it? And when I say investment, I mean for the buyer purchasing to live in the property as their primary residence, because this is an investment in your property. This is your property. Um, you want to know what you're getting yourselves into, just like Will mentioned. You're looking at the price, the value, and is it worth putting in X amount of dollars into this property to purchase it at below face value and bringing it to face value. So I love that. And if you need any help or if you have any questions, you can reach out to Will Grausso, and that's his number below. I put his number down there below. You can reach out to him. He's with Cardinal Mortgage. And Will, before we go, uh, you could close out and also mention like just a little bit about who you are as well, just a reminder. And I would love to bring you back, of course, and talk about first-time home buyers, because I know we're working on something soon with
yeah.
first-time home buyers, and we can just nudge a little bit on what that would be when in our next on our next call.
Okay. All right. So, my name, like we said, I've been working with Harjeet about a year, and I'm a licensed loan officer with Cardinal. It's actually Cardinal Financial, believe it or not. I didn't want to correct you before, but
Oh,
they, yeah, no worries, no worries. But it's a, nationwide mortgage lender. And I've been working with them a little over a year. I've been around mortgages and the mortgage industry for about 15 years. And I've been helping homeowners, borrowers, people in default through this process from every angle. And where Cardinal lands is it's a company that has built a great technology. I have a wide range of lending options to help homeowners, both from the purchase side as well as looking at refinances, to see if they make economic sense. And it's been really enjoyable to kind of have the opportunity to do it full time. So the pandemic led to me doing it full time. and building relationships, and trying to you do it as round it out as a career. And it's been wonderful. And like I said, I bring a lot of knowledge from different angles, and I just try to provide great service and try to help borrowers and customers where I can. So
Thank you, Will. Thank you, Will. And you definitely have been bringing so much value, not only to buyers that are looking to purchase homes, you've been bringing value to real estate agents such as myself. And also, like, it's just been a wonder that we met last year
yeah,
and we've become great friends.
absolutely. Yeah,
And I appreciate all the knowledge you do bring, especially with everything that you've done, all the experiences that you bring into the mortgage industry as well. Because I learn a lot from you, and I know a lot of other real estate agents that do learn a lot from you and bring, we value your information and the help that you do provide us. And so that I am so grateful for. And something that you said earlier is when you're working with a lender and a real estate agent and lawyers, I love that we're so connected that you can trust to speak to any one of us and we're all connected and we'll all be on the same page. So, because our goal is to provide the best and highest service possible for our buyers and our sellers. So I appreciate you mentioning that earlier,
yeah,
and grateful for the value that you've been bringing for the past year, not only to myself, but to all of my clients that I have recommended highly to you, or anybody here that's watching and reaching out to you. So I really appreciate you helping everybody that you can.
yeah.
Thank you again.
And it's been, like I said, it's been a joy. And I will give credit where credit's due. Cardinal's been great about
Yeah,
providing a slew of resources to just to help, just to
yeah,
help wherever I can, or to help get deals done. And it's been very enjoyable. So like I
yeah.
said, I definitely value our relationship, and I look forward to continuing that, as we go forward. So
Of course, and I can't wait to do the first time home buyer
yeah,
seminar.
yeah, definitely. We'll break down the conventional lending versus FHA, and yep, dig into it. So
Awesome. Conventional, FHA, and
honestly, VA. We'll go over VA as well.
oh, that's so
Um,
exciting.
yeah.
Okay, yes.
So we'll break down.
Yeah,
Yeah, we'll break down what's available and kind of where people fit, where they fit on what works for them, where everything goes. We'll give a good run through of all of it.
oh,
So
that is exciting. I can't wait for that. So
yeah.
thank you guys. If you're watching this a little later afterwards, if you have any questions, do comment it below. And again, oh, I had Will's number here just about 2 minutes ago, so you'll see that here. And you can also reach him. Well, if you don't mind, if you could send me a link to your website so I can post in the comments.
Okay.
And I'll post that in the comments. And so you could just click on the link over
Like,
there and reach Will through the comments as well.
okay, perfect. Yeah, I'll send it over shortly.
Thank you.
All right. Thanks.
Have a great have a great night, guys.
Yes, thank you, everyone.
Bye.
Take care.
Take care.